Welcome back to the Malaysia Money Matters show. It's the 18th of November 25.
Good to be here. We've gone through all the market news, the political shifts you sent over, and we've basically tried to pull out the key financial takeaways you really need to know today.
So let's jump right into corporate results. They tell a really interesting story, I think.
They do. A bit of a mixed bag.
We'll start with some seriously impressive numbers from 99 Speed Mart. I mean, they just posted record third-quarter results. Net profit shot up 50% to RM 160.65 million.
50%. That is phenomenal. And revenue was up 19% too, to what, RM 3.04 billion?
Exactly. So that tells you that consumer demand is still really strong.
It does, but it's not just that. They're executing so well. They've just expanded into Fuzhou in China, and they finally opened in Kelantan, which, completes their map here at home. That's strategy driving growth.
Okay, so that's the good news. But then we have the EPF, and this is where maybe the market sentiment starts to get a little nervous. EPF also had a great quarter. Net investment income grew 27% to over RM 25 billion. But the CEO's comments, they were pretty cautious.
This is the signal you need to pay attention to. The CEO talked about elevated equity valuations, and he said they plan to accelerate profit-taking in the fourth quarter.
So basically cashing out some of their gains.
Exactly. When a fund that big says they think things are a bit pricey and they're going to sell, that's not just housekeeping. They're telling you the easy money phase might be over for now. It could really temper the market.
And you can already see that kind of pressure in the banking sector, right?
Yeah.
Public Bank's 3Q profit actually slipped 3.65%.
Yep, down to RM 1.84 billion, and that is a direct result of the OPR cut. When the central bank cuts rates, it just squeezes the bank's core business. Simple as that.
Even with good gains from selling bonds, it wasn't enough to cover that hit.
It wasn't.
And speaking of pressure, Celcom-DG, their net profit dropped 22%.
Oof, yeah, down to RM 341 million. That's a big drop. They did keep the dividend going, but you're seeing the real cost of that huge merger now. Higher costs, more provisions. It's all hitting the bottom line.
I wonder how much of that is just one-off integration stuff.
That's the question, isn't it? Is it temporary, or is it a sign of, deeper competitive issues in the telco space?
Okay, one more corporate story. Chubb Malaysia is listing on the main market.
Right, but this is basically a forced IPO. Bank Negara has a rule about foreign ownership for insurers, and this is just Chubb's way of complying with it. A regulatory move creating a big market event.
Let's shift from companies to government projects. The LRT-3, it's been delayed. Again,
I think everyone in the Klang Valley just sighed collectively. The new target is the end of 2025, or maybe even later.
the transport minister says it's about prioritizing safety and testing, which is fair.
Of course, safety first. But it means more delays for commuters, and that...
On the roads, though, it seems like the multi-lane fast flow toll system is actually moving forward.
It is. They're tabling amendments to a few laws next year. They need the legal framework in place, to go after people who don't pay. You can't have a barrierless system without strong enforcement.
And then a huge political and financial story out of Borneo.
Oh, yeah, this is big.
A committee has been set up to implement Sabah's 40% net revenue claim. The federal government isn't appealing the court ruling.
Which means we're finally moving from talk to actual negotiation. That 40% claim, it's from the Malaysia Agreement 1963, MA63. This could lead to a massive financial restructuring between the state and federal governments.
Okay, let's look globally for a minute. Things are getting tense between China and Japan over Taiwan.
Yeah, and China is threatening economic retaliation, like cutting back on tourism. That kind of spat between two huge trading partners just creates a lot of risk and uncertainty for businesses.
And then there's a serious political crisis in Bangladesh.
A very serious one. The ousted prime minister, Sheikh Hasina, was just sentenced to death. This is happening just months before elections are supposed to be held. It's a huge red flag for regional stability.
Let's end on some better news. Alphabet shares got a nice little boost.
They did, because Berkshire Hathaway, Warren Buffett's company, revealed they bought a nearly US $5 billion stake.
Which is a big deal because they don't usually do big tech bets.
Exactly. It's a huge vote of confidence from a very influential investor, especially when people are a bit nervous about all the money tech companies are spending on AI right now.
So we've covered a lot. Strong retail performance, but also pressure on banks, major delays on infrastructure, and some really key political shifts at home and abroad.
And I think the big thread here is liquidity. So here's the final thought for you to chew on. If the EPF is serious about accelerating its profit-taking in this last quarter, how is that huge outflow of capital going to shape the Malaysian market? What does it mean for valuations as we head into the end of the year?
That is the critical thought for the day. For more deep dives just like this one, make sure you subscribe to the Malaysia Money Matters podcast. We'll catch you next time. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.